Please be advised that the information presented in this video is for educational and informational purposes only and does not constitute financial or legal advice. I am not a licensed insurance agent or financial advisor. Insurance policies can vary significantly by state and by carrier. You should always consult with a qualified and licensed insurance professional to discuss your specific needs and circumstances before making any decisions regarding your insurance coverage. Imagine this for a second. You're driving to meet a client. Maybe you're a freelance photographer on your way to a shoot, a real estate agent heading to a showing, or even just delivering a package for a side hustle. You're minding your own business, stopped at a red light when bam, someone rear-ends you. It's not your fault, but the damage is done. Your bumper is crushed, your neck is sore, and your day is ruined. But you think, okay, annoying, but that's what I have insurance for. You call your personal auto insurance company, the one you faithfully paid every single month for years. You file the claim, expecting a check for the repairs and medical bills. And then you get the letter, or the phone call, the one that makes your stomach drop. The claim is denied. All of it. The thousands in repairs to your car? Your problem. The medical bills? On you. Why? Because of one tiny detail you never thought mattered. You were on your way to a work appointment. Your insurance company informs you that because the vehicle was being used for business purposes at the time of the accident, your personal policy is void. Suddenly, your reliable safety net has vanished, and you're facing a financial crisis, all because of a distinction you didn't even know existed. This isn't a scare tactic. It's a reality for thousands of Americans every single year. It's the devastating consequence of the single most misunderstood topic in auto insurance. The massive critical difference between a personal auto policy and a commercial auto policy. Getting this wrong is not a small mistake. It's a gamble with your entire financial future, your business, and your personal assets. And in today's economy, where more people than ever are self-employed, running small businesses from their car, or working in the gig economy, this confusion is a ticking time bomb. That is exactly why we are here today. By the time this is over, you will have absolute clarity. You will understand precisely what separates these two policies, and more importantly, you will know which one you need to be fully and legally protected. We are going to demystify the jargon and cut through the confusion to give you the knowledge your insurance company might not volunteer. This isn't just about avoiding a denied claim. It's about building a bulletproof shield around your livelihood, so that one bad day on the road doesn't destroy everything you've worked for. So let's dive into the first, and arguably the most important difference, the concept of permitted use. This is the invisible line in the sand drawn by every single personal auto insurance policy in America. Think of your personal auto policy as a contract with a very specific purpose. You tell the insurance company, I'm going to use this vehicle for personal reasons. That means commuting to and from a single place of work, driving to the grocery store, taking your kids to soccer practice, going on a road trip. The insurance company calculates your risk and your premium based on that personal use. The moment you cross that line and begin using your vehicle for commercial purposes, you fundamentally change the nature of that risk. The contract you made is broken. This is what's known as a business use exclusion, and it's the legal clause that insurance companies use to deny claims like the one in our opening story. But what exactly counts as business use? This is where so many people get into trouble. It's not just for big trucks with company logos on the side. The definition is incredibly broad. Are you a rideshare driver for Uber or Lyft? That's business use. Are you delivering food for DoorDash, Grubhub, or a local pizzeria? That's business use. Are you a contractor, a plumber, an electrician, or a landscaper hauling tools and equipment to a job site? That is definitively business use. A real estate agent driving clients to see properties? Business use. A mobile notary, a home healthcare aide traveling between patients, a salesperson visiting customers? Business, business, business. Even something as simple as a freelance graphic designer using their car to deliver a final project to a client could potentially trigger this exclusion. The insurance company's logic is simple. When you're using your vehicle for work, you're likely driving more miles, often in heavier traffic, during busier times of the day, and possibly carrying goods or people for a fee. You represent a higher risk than a standard commuter. Your personal policy was not designed, nor was it priced, to cover that elevated level of risk. A commercial policy, on the other hand, is built specifically for this. It acknowledges that you are using your vehicle to generate income, and it prices the policy accordingly to cover that risk. It's the right tool for the job. Using a personal policy for business is like trying to put out a house fire with a water pistol. When you truly need it, you'll find it's completely inadequate. Now, this leads us directly to the second critical difference, which is a direct consequence of the first: liability limits. This is where the numbers get big, and the consequences of being underinsured become truly terrifying. Liability coverage is the part of your insurance that pays for injuries and property damage you cause to other people in an accident where you are at fault. If you run a red light and hit another car, your liability coverage pays for the other driver's medical bills and the repairs to their vehicle, up to your policy limit. On a typical personal auto policy, the liability limits might be something like 50/100/25. This means you have $50,000 of coverage for bodily injury per person, a maximum of $100,000 for bodily injury for the entire accident, and $25,000 for property damage. Some people carry higher limits, maybe 100/300/50, and many, unfortunately, only carry the bare minimum required by their state, which can be shockingly low. Now let's contrast that with a standard commercial auto policy. The most common liability limit for a commercial policy isn't $50,000 or $100,000. It's $1 million. Let that sink in. $1 million. Why the enormous difference? Because the potential for catastrophic loss is so much higher in a business context. Let's play out a scenario. You're a contractor driving your personal pickup truck, which is insured on a personal policy with a $50,000 property damage limit. You're hauling a small trailer with equipment. You accidentally misjudge a turn and clip a brand new Mercedes-Benz. The damage is extensive. Then your trailer swings out and smashes into a storefront, shattering a large plate glass window. The bill to repair the Mercedes is $40,000. The bill to replace the storefront window and repair the building is $25,000. The total property damage you caused is $65,000. Your personal policy pays out its maximum of $50,000. Who pays the remaining $15,000? You do, out of your own pocket. And that's before we even consider the fact that your insurer might deny the claim entirely because you were driving to a job site, leaving you on the hook for the full $65 grand. Now imagine the same accident, but instead of hitting a car, you cause a multi-vehicle pileup. Several people are seriously injured. One person has a spinal cord injury, another has a traumatic brain injury. The medical bills are astronomical, not to mention the lawsuits for lost wages, pain, and suffering that will inevitably follow. Those personal policy limits of $50,000 or $100,000 per person, they will be exhausted in an instant. A single serious injury can easily result in a lawsuit worth over $1 million. When your insurance runs out, where do the lawyers for the injured parties look next? They look to your business assets. And if your business assets aren't enough, they will come after your personal assets. Your house, your savings, your retirement accounts. Everything you've ever worked for can be seized to satisfy that judgment. This is the protection that a $1 million commercial liability limit provides. It creates a financial fortress around your business and your personal life. It's designed to handle the worst-case scenario that a small business owner might face on the road. It recognizes that when you're operating as a business, your liability exposure isn't just personal, it's professional. The stakes are infinitely higher, and the level of protection must match. The difference between a personal and commercial policy isn't just a piece of paper. It's the difference between a minor inconvenience and total financial ruin. Let's unpack what that financial ruin actually looks like. It's not just a big bill. It's a lawsuit that names you personally. It's a lien against your house. It's your life savings, your kids' college fund, everything you've worked for, evaporating in an instant. And it all hinges on one tiny, almost invisible clause buried deep in your personal auto policy. The business use exclusion. This is the tripwire. It's the single most common reason a small business owner finds themselves completely unprotected after an accident. To understand it, let's tell a story about a guy we'll call Mark. Mark is a classic American entrepreneur. He's a skilled carpenter who, after years of working for someone else, decides to go out on his own. He starts small, just a few side jobs on the weekends. He uses his personal pickup truck, a trusty Ford F-150 that he's had for years. It's the same truck he uses to take his kids to soccer practice and to pick up groceries. He has a standard personal auto policy on it, the same one he's paid on time every month for a decade. He feels covered. He feels safe. Business starts to pick up. Soon, his weekend side hustle becomes his full-time gig. He's hauling lumber from the home improvement store, carrying ladders and saws, and driving to different job sites all day long. The truck is now a tool, the most important tool in his entire operation. But in his mind, it's still just his personal truck. The insurance paperwork is the last thing he's thinking about. He's busy trying to build a future. One Tuesday afternoon, he's driving to a client's house to finish a deck installation. He's got the bed of the truck loaded with expensive composite decking materials and all his power tools. He's stopped at a red light on a busy 4-lane road. The light turns green. He starts to accelerate, and that's when it happens. A driver, texting and not paying attention, plows into the back of his truck at 45 miles per hour. The impact is violent. Mark's truck is shunted forward into the intersection, causing a chain reaction involving 2 other vehicles. It's a mess. Airbags deploy, glass shatters, metal shrieks. Thankfully, no one is critically injured, but there are several people complaining of neck and back pain, and all 4 vehicles, including Mark's F-150, are seriously damaged. His tools and the client's materials are scattered across the road, ruined. After the police and paramedics leave, Mark does exactly what you or I would do. He calls his insurance company. He's shaken, but he's relieved. This is why you pay for insurance, right? For moments just like this. The claims adjuster on the phone is initially very sympathetic. He takes down all the details of the accident, and then he asks the 2 simple questions that will change Mark's life forever. Where were you going, Mark? And what was the purpose of your trip? Mark, being an honest guy, tells the truth. I was on my way to a client's house. I'm a carpenter and I was going to finish a job. I had all my tools and materials in the back. There's a slight pause on the other end of the line. The adjuster's friendly tone becomes a little more formal, more distant. He says, I see. Thank you for that information, Mr. Johnson. We'll need to review your policy and the details of this incident. Someone will be in touch. A week later, Mark gets a certified letter in the mail. It's from his insurance company. He opens it expecting an update on the claim, maybe a check for his totaled truck. Instead, his blood runs cold. The letter is a formal denial of his claim. It cites the business use or commercial use exclusion in his policy. It states that because he was using his vehicle for commercial purposes, transporting tools and materials as part of his profession, his personal auto policy does not provide coverage for the accident. The letter goes on to inform him that he is now personally responsible for everything: the repairs to the other 2 vehicles, the medical bills for the other drivers and their passengers, which are already climbing into the tens of thousands, the cost to replace his own truck, the cost of his destroyed tools and materials. And to top it all off, he is now facing a lawsuit from the other parties involved. Mark is staring at a bill that could easily exceed $200,000. His business is gone. His savings are gone. The equity in his home is at risk. All because he didn't understand that the moment his truck crossed the line from a personal vehicle to a business tool, his insurance became a worthless piece of paper. This isn't an exaggeration. This happens every single day across the United States. Personal auto policies are specifically designed and priced for personal risk. The insurance company calculates your rate based on you driving to work, to the store, on vacation. They're betting on a predictable, average level of risk. The moment you introduce a business element, the entire risk profile changes. Now you're likely driving more miles. You might be carrying heavy or hazardous materials. You could be transporting goods for a fee, which is a massive red flag for personal insurers. You might have employees driving the vehicle, introducing a whole new layer of liability. The vehicle itself might be modified with racks, toolboxes, or signage. These are all factors that dramatically increase the likelihood of an accident and the potential cost of a claim. The insurance company never agreed to take on that heightened risk under your personal policy, so they don't. The exclusion is their contractual way out. So what exactly counts as business use? This is where people get tripped up. It's not just for full-time contractors or delivery fleets. The definition is incredibly broad. Are you a real estate agent driving clients to see properties? That's business use. Are you a caterer delivering food to an event? That's business use. Are you a photographer driving to a paid photo shoot with your equipment in the trunk? Business use. Are you a rideshare or food delivery driver for services like Uber, Lyft, or DoorDash? That is absolutely, unequivocally business use, and it often requires a specific type of hybrid or commercial policy. Even seemingly minor activities can trigger the exclusion. Let's say you're a consultant, and you drive to the office supply store to pick up a case of paper for your home office. Technically, the primary purpose of that trip is commercial. Or you're a part-time handyman and you swing by a client's house to fix a leaky faucet on your way home from your regular 9-to-5 job. That detour? It just turned your commute into a commercial trip. People think, oh, but I only use it for my side hustle once or twice a week. To an insurer, that doesn't matter. It's not about frequency. It's about the nature of the activity itself. If you are engaged in any activity with the intent to generate revenue, you are likely engaging in business use. This is the critical divide. A personal policy is designed to protect your personal life, your commute, your family, your errands. A commercial policy is designed to protect your livelihood, your business, your assets, your employees, and your clients. It acknowledges the higher stakes, the increased mileage, the specialized equipment, and the unique liabilities that come with running a business. It's built from the ground up to handle the exact scenario that ruined Mark. It's not an upgrade. It's a different tool for a different job. So when Mark's claim was denied, he was left holding the bag for everything. But if he had a commercial auto policy, the story would have a completely different ending. That policy wouldn't have an exclusion for business use. It would be the entire reason for the policy's existence. But what exactly would that commercial policy have covered? How does it go beyond just fixing the cars? It protects the very heart of your business in ways a personal policy could never dream of. It's a shield not just for your truck, but for your future. And understanding those specific coverages is the key to making sure you never, ever have to open a letter like the one Mark received. So let's break down these specific coverages, because this is where the rubber truly meets the road. The single biggest, most fundamental difference between a personal auto policy and a commercial policy isn't the price, it's the philosophy. A personal policy is designed to protect you, the individual, and your personal assets, your house, your savings, your wages. It's built for the risks of daily life. Driving to the grocery store, taking the kids to soccer practice, going on a road trip. The scale is personal. A commercial policy, on the other hand, is built on a completely different foundation. It's designed to protect a business entity. It understands that the risks are not just different, they are exponentially larger. A business has more to lose: its revenue, its equipment, its reputation, and the livelihoods of its employees. The scale is commercial, and the policy is a fortress built to withstand a commercial-grade assault. The most glaring example of this is in the liability coverage. This is the part of the policy that pays for injuries and property damage you cause to others. On your personal auto policy, you'll almost always see your liability limits written as 3 separate numbers, something like 50/100/50. This is what's known as a split limit. Let's decipher that code. The first number, 50, means your policy will pay a maximum of $50,000 for bodily injury to any one person in an accident you cause. The second number, 100, means your policy will pay a maximum of $100,000 for bodily injuries for the entire accident, no matter how many people are hurt. And that last number, 50, means you have $50,000 to cover all the property damage you caused, whether you hit one car or a dozen. For personal driving, these limits are often adequate. But for a business, they're a ticking time bomb. Commercial policies do it differently. They typically use what's called a combined single limit, or CSL. Instead of splitting the coverage into little buckets, you get one giant reservoir of protection. A common CSL is $1 million. That's $1 million that can be used in any combination needed to cover bodily injury and property damage from a single accident. Let's see how this plays out in the real world. Meet Sarah. Sarah runs a boutique floral business. She has a beautiful, branded delivery van she uses to bring arrangements to weddings and events. She's a fantastic driver, but one rainy afternoon, she hits a patch of water on the road. The van hydroplanes and she slides into a brand new Mercedes, which then gets pushed into one of those ornate, custom-built brick mailboxes in front of a mansion. No one is hurt, thank goodness, but the damage is extensive. The repair estimate for the Mercedes is $35,000. The quote to rebuild the custom mailbox and landscaping is $20,000. The total property damage is $55,000. If Sarah had tried to save a few bucks and keep her van on a personal auto policy with that 50/100/50 limit we talked about, she's in a world of trouble. First, her insurance company might deny the claim outright because she was using the van for business, a clear violation of the policy terms. But let's pretend they don't. Her policy has a $50,000 limit for property damage. The total bill is $55,000. That means after her insurance pays its max, Sarah's small floral business is getting a bill for the remaining $5,000. That's $5,000 straight out of her profits, her savings, her ability to grow her business, all because her insurance had the wrong structure. Now let's rewind. What if Sarah had the proper commercial auto policy with a $1 million combined single limit? The claims process is a completely different story. Her agent files the claim. The adjuster assesses the damage. The total is $55,000. Is that less than $1 million? Yes. A check is cut. The Mercedes is repaired. The mailbox is rebuilt. It's a non-event for Sarah's business finances. The fortress did its job. The CSL provided a deep, flexible pool of money that covered the entire incident without breaking a sweat. It didn't care how much was for the car versus the mailbox. It just saw a total and paid it. That is the power and the peace of mind a commercial policy provides. It's not just more coverage. It's smarter, more flexible coverage built for the unpredictable nature of business. But liability doesn't stop with just the vehicles you own. And this next part is a trap that ensnares thousands of small businesses every single year. Let's talk about a coverage that most people have never even heard of, but that can literally be the difference between survival and bankruptcy: hired and non-owned auto coverage. This sounds like confusing insurance jargon, but the concept is simple. Hired auto provides liability protection when you or an employee are driving a vehicle you've rented, leased, or borrowed for your business. Non-owned auto provides liability protection when an employee uses their own personal vehicle for a business task. Think about that for a second. How many times have you asked an employee to run to the office supply store? To drop off a package at FedEx on their way home? To pick up lunch for the team? Every single one of those moments, your business is exposed. Let's meet David. David runs a successful catering company. He has a large, fully insured catering truck. But one Saturday, he's short on supplies for a big wedding. He gives his employee, Tom, $100 and asks him to run to the store in Tom's own personal minivan to grab extra ingredients. It's a simple errand, a 10-minute trip. What could go wrong? On the way back, Tom is checking his GPS. He gets distracted for just a split second, runs a red light, and T-bones another car, seriously injuring the other driver. It's a terrible accident. The first call Tom makes is to his personal auto insurance. But when his insurer finds out he was driving for work, they invoke the business use exclusion in his policy and deny the claim. Now Tom is personally on the hook. But it doesn't end there. The injured driver hires a sharp attorney. That attorney knows that Tom, a part-time employee, probably doesn't have deep pockets. But his employer, David's Catering LLC, does. They file a massive lawsuit not just against Tom, but directly against David's business. Why? Because of a legal doctrine called respondeat superior, a Latin phrase that basically means, let the master answer. It holds that an employer is legally responsible for the actions of an employee if those actions are done within the scope of their employment. Tom was running a work errand for David. Therefore, David's business is on the hook. So David calls his insurance agent. He says, "My catering truck is fully insured. I have $1 million commercial policy." The agent gives him the devastating news. "David, your policy covers your catering truck. It doesn't cover Tom's minivan. You're not insured for this." Suddenly, David's entire business, everything he has worked for, is facing a lawsuit that could easily reach hundreds of thousands, if not millions of dollars. He has no insurance to pay for a lawyer to defend him, no insurance to pay a potential settlement. He is completely, utterly exposed. This single 10-minute errand could bankrupt his company. This is not a scare tactic. It's a daily reality in courtrooms across America. The solution? Hired and non-owned auto coverage. It's an add-on to a commercial policy that is often incredibly inexpensive, yet it is priceless. If David had this coverage, his commercial policy would have sprung to life. It would have provided a legal defense for his business and paid for the settlement up to his $1 million limit, even though the accident happened in a vehicle he didn't own. It plugs a catastrophic hole that exists in almost every small business. So when we compare personal and commercial policies, we're not just talking about higher limits. We're talking about a fundamentally different architecture of protection. The combined single limit offers a robust, flexible shield for your own vehicles. And hired and non-owned coverage extends that shield to protect you from the vast, hidden risks of vehicles you don't even own. It's about anticipating the unique ways a business can be sued and building a defense before the attack ever comes. But liability is only half the story. What happens when your vehicle itself, the very tool that makes you money, is damaged or stolen? The differences there are even more shocking, and can mean the difference between getting a check for a new truck, or a check that barely covers the cup holders. Let's talk about the metal, the engine, the four wheels that you rely on every single day. When that asset is crumpled in a wreck or vanishes overnight, the type of policy you have determines your entire future. This isn't a small detail, it's everything. First, let's break down the two main coverages that protect your actual vehicle: collision and comprehensive. It's simple. Collision coverage pays to repair or replace your vehicle if you hit something, another car, a pole, a guardrail. Comprehensive, on the other hand, covers almost everything else: theft, vandalism, a tree falling on it during a storm, hitting a deer, fire, flooding. Think of it as the acts of God and criminals coverage. Now, both a personal auto policy and a commercial policy offer these. So they're the same, right? Absolutely not. The difference isn't in the name of the coverage. It's in the math they use to write you the check. And that math can either save your business or end it. A personal auto policy values your vehicle based on one thing and one thing only: actual cash value, or ACV. This is one of the most misunderstood and painful terms in all of insurance. ACV does not mean what you paid for the car. It doesn't mean what you think it's worth. It means what your vehicle was worth a microsecond before it was destroyed. It's the replacement cost minus depreciation. And depreciation is a brutal, relentless force. Let's imagine a contractor, we'll call him Frank. 5 years ago, Frank bought a brand new Ford F-250 for his construction business. He paid $55,000 for it. He's been paying it off diligently. He uses it every day for work, hauling materials, towing a trailer. He's got it insured on his personal auto policy because his agent said it was fine and it saved him a few bucks a month. One morning on the way to a job site, someone runs a red light and T-bones him. The truck is totaled. A complete loss. Frank is okay, but his business is now on life support. He thinks, okay, it's a 5-year-old truck, I've taken good care of it, maybe it's worth around $35,000 now. I owe $20,000 on the loan, so I'll get a check, pay off the bank, and have $15,000 for a down payment on a new one. I'll be back on the road in a week. Then the call comes from his personal auto insurance adjuster. The adjuster has been busy. They've scoured the market for comparable 2018 Ford F-250s in a 100-mile radius. They've factored in Frank's mileage, a few door dings they noted in the salvage yard photos, and the big one, 5 years of depreciation. The actual cash value, they inform him, is $23,000. Frank's heart sinks. $23,000. He still owes $20,000 on the loan. After his $1,000 deductible, he's going to get a check for $22,000. He can pay off the loan and be left with a grand total of $2,000. $2,000 to replace a $55,000 work truck. He has no truck, no way to get to job sites, no way to haul materials, and only $2,000 in his pocket. His business is effectively over. But wait, gets so much worse. What about all the money Frank poured into that truck to make it a workhorse? He had a $10,000 utility body with built-in toolboxes installed on the back. He had a heavy-duty ladder rack welded to the frame. He had the truck wrapped with his company's logo and phone number. That's another $15,000 in equipment, permanently attached to the truck. He tells the adjuster about all this. The adjuster's response is chillingly simple. I'm sorry, sir, but your personal policy covers the vehicle as it left the factory. We don't cover commercial modifications or permanently attached equipment. That $15,000 he invested? It vanished. It's worth zero. The insurance company is paying him for a stock F-250, not the custom mobile workshop he actually owned. The check he's getting doesn't even cover the cup holders when you factor in what he's truly lost. This is the personal policy nightmare. It's designed for commuters, not for commerce. Now let's rewind. Let's say Frank had a proper commercial auto policy. The entire story changes. Commercial policies understand that a work vehicle is more than just a car. It's a piece of machinery. They offer different, superior ways to value it. The first and most common is called stated amount. With a stated amount policy, when Frank first bought the insurance, he would have a conversation with his agent. They would document the truck, the custom utility body, the racks, everything. Together, they would declare or state the total value. Let's say they agreed it was worth $40,000 with all the equipment. Now, if the truck is totaled, the insurance company will pay the lesser of the actual cash value, or that $40,000 stated amount. It's better because it at least acknowledges the custom equipment, but it still uses ACV as a baseline so you can still be hurt by depreciation. It's a ceiling on what the company will pay, not a guarantee. But the real game changer, the gold standard for any serious business owner, is agreed value coverage. This is a completely different world. With agreed value, Frank and his insurance company would look at the truck, the invoices for the utility body and the wrap, and they would come to a firm agreement. They would put it in writing in the policy. This 2018 Ford F-250 and its attached equipment are valued at $40,000. Period. There is no mention of actual cash value. There is no last-minute market analysis. There is no depreciation calculation after the loss. The value is agreed upon up front. So now when Frank's truck is totaled, the phone call is very different. The adjuster says, "Mr. Smith, we see you have agreed value coverage for $40,000. After your $1,000 deductible, we are sending you a check for $39,000. Think about the difference. In one scenario, Frank gets a check for $22,000, is left with $2,000 after paying his loan, and his business is dead. In the second scenario, he gets a check for $39,000. He pays off his $20,000 loan and has $19,000 in cash for a down payment on a new truck. He can go to a dealership that very day. His business is saved. That is the monumental difference between a personal and a commercial policy when it comes to protecting your most vital asset. And we're still not done. We've only talked about the things attached to the truck. What about the things inside it? Let's switch to Maria, a professional wedding photographer. She drives an SUV to her gigs, and in the back she has over $20,000 worth of cameras, lenses, drones, and lighting equipment. Her SUV is stolen from the venue's parking lot during a reception. If Maria has a personal auto policy, it might cover the theft of her SUV, at that punishing actual cash value, of course. But the $20,000 of camera gear? Zero. Absolutely nothing. A personal auto policy explicitly excludes coverage for business property or tools of a trade being transported in the vehicle. She might try to claim it on her homeowner's policy, but most of those have very low limits for business property, maybe $1,000 or $2,000 if she's lucky. She's out tens of thousands of dollars in gear. Her career is in jeopardy. But if Maria had a commercial auto policy, she could have also purchased something called inland marine coverage, often called a tools and equipment floater. It sounds weird, but it's specifically designed to protect your business property while it's away from your main office, whether it's in your vehicle, on a job site, or anywhere in between. With that commercial policy and the inland marine endorsement, when her SUV is stolen, she makes 2 calls. The first one gets the claim started for her vehicle, valued correctly. The second call gets the claim started for her $20,000 of stolen camera gear. She provides receipts or an inventory list, and she gets a check to replace the tools she needs to do her job. She loses a vehicle, but she doesn't lose her livelihood. So your commercial policy just bought you a new truck and replaced your stolen tools. That's incredible. But what about the 2 weeks of jobs you lost while all that was happening? The income that vanished into thin air while you were shopping for a new vehicle and waiting for equipment to be delivered? A personal policy will give you a tiny rental car, but a commercial policy can actually pay your bills. It can replace your lost profits. And how that works is one of the biggest secrets in the insurance world. This powerful coverage is called business interruption insurance, or sometimes loss of income coverage. And it is, without a doubt, one of the most critical yet overlooked forms of protection a small business owner can have. It's the difference between a bad month and a closed business. Let's make this real. Imagine 2 plumbers. We'll call them both Dave. They live in the same town, have similar skills, and drive nearly identical work vans. They both have families, mortgages, and dreams of growing their business. The only real difference is their insurance. Dave number 1 has a personal auto policy on his work van. He told his agent he uses it for work, so they added a little business use note to the file. He pays his bill, thinks he's covered, and goes about his life. Dave number 2 has a proper commercial auto policy. His agent walked him through the options, and he added a specific endorsement for business interruption coverage. It costs him a bit more each month, maybe the price of a few pizzas, but he sees it as a necessary business expense like his tools or his phone. One Tuesday morning, both Daves are on their way to separate job sites. And in 2 separate, unrelated incidents, they're both T-boned by someone who ran a red light. Both Daves are okay, thankfully, but both of their vans are completely totaled. The frames are bent, the tools and parts inside are scattered and destroyed. The vans are undrivable. Now let's follow their journeys. We'll start with Dave number 1, the one with the personal policy. The other driver's insurance accepts fault, which is good. His own insurance company is helpful. They start the claim and they set him up with a rental car. The problem? The rental car is a Toyota Camry. He calls the insurance adjuster. "Hey," he says, "I'm a plumber. I can't fit a water heater, 3 lengths of copper pipe, and my toolbox in a Camry. I need a van." The adjuster is sympathetic, but her hands are tied. "I'm sorry, Dave, but your policy's rental coverage provides for a comparable vehicle. Your van is registered as a personal vehicle, like a minivan. The comparable replacement is a sedan or a small SUV. That's what the policy states." So Dave is stuck. He starts calling rental companies looking for a commercial van. He finds one, but it's going to cost him over $100 a day out of pocket. Plus, he has to get it properly equipped. He has thousands of dollars worth of specialized tools and inventory that were in his old van. He needs to replace those before he can even think about working. The other driver's insurance will eventually pay for the totaled van and maybe even the tools, but that takes time. Appraisals, negotiations, paperwork. It could be weeks, even months. In the meantime, the clock is ticking. Dave has jobs scheduled. Mrs. Peterson's water heater is on the fritz. The new restaurant downtown needs its sinks and pipes installed. He has to start making calls. "I'm so sorry, Mrs. Peterson, my van was in an accident. I can't get there today." To the restaurant owner. "I know we had a deadline, but I've had a major setback." For the first few days, his clients are understanding. But their problems don't wait. Mrs. Peterson calls another plumber. The restaurant can't afford delays, so they hire a different company to finish the job. Dave's reputation, which he spent years building, starts to take a hit. Worse, the income stops cold. But the bills don't. The mortgage is still due. The family needs groceries. His business loan payment, his cell phone bill, his software subscriptions, they all keep coming. He's bleeding cash. Every day his business is shut down, he's not just failing to make money. He's going deeper into debt. The stress is immense. He's watching his life's work crumble because of a single accident that wasn't even his fault. The personal auto policy fixed his car problem, but it did nothing to solve his business problem. And his business is his life. Now let's rewind and check in on Dave number 2, the one with the commercial policy. His van is also totaled. He makes the same call to his insurance company, but the conversation is completely different. His agent says, "Okay, Dave, let's get this handled. First, we'll get the claim started on your van. Second, let's talk about getting you back to work. Your policy includes rental reimbursement for a comparable commercial vehicle. We'll get you into a cargo van today. Third, and most importantly, let's open a business interruption claim." This is where the magic happens. The agent explains that while the company is working to pay for his totaled van and his destroyed tools, the business interruption coverage is designed to replace his lost net income. The adjuster asks him for some documents. Things like past profit and loss statements, tax returns, bank statements, and a list of the jobs he had scheduled that he now has to cancel or postpone. Dave, being a good business owner, has this paperwork organized. He shows that, on average, his business generates a net profit of, let's say, $2,000 a week. He proves that he had 3 major jobs lined up that would have brought in $6,000 over the next 2 weeks, all of which are now on hold. The insurance company reviews the documents, and then they cut him a check. A check not for the van, not for the tools, but a check for his lost profits. While he's waiting for the new van to be purchased and outfitted, his commercial policy is paying his salary. It's paying his business's fixed expenses, the things he has to pay whether he's working or not, like his business insurance premium, his phone bill, the rent on his small storage unit. Think about the profound difference. Dave number 1 is at home, burning through his personal savings, stressing about his mortgage, watching his clients go to his competitors. He's filled with anxiety and despair. Dave number 2 is actively shopping for a new van. He's coordinating with his suppliers to restock his equipment. He's calling his clients and saying, "There's been a delay because of an accident, but don't worry, my insurance is handling it and I'll be back on the job by Monday." Your spot is secure. He has peace of mind. His family isn't feeling the financial pressure. His business, while temporarily paused, is not dead. The policy has created a financial bridge over the disaster. This isn't some fantasy. This is literally how business interruption insurance works. It covers the gap. It pays for your lost net income and continuing operating expenses during what's called the period of restoration. the time it reasonably takes to get your vehicle repaired or replaced, and get you back to the same financial position you were in before the accident. And this doesn't just apply to plumbers. Are you a photographer whose car full of camera gear gets stolen? Business interruption can cover the income from the weddings you have to cancel while you replace everything. Are you a food truck owner whose truck gets hit, putting you out of commission for a month during the peak summer season? It can replace those lost hot dog and taco sales. Are you a landscaper, a contractor, a delivery driver, an electrician? If your vehicle is your business, then an accident doesn't just cause a vehicle loss. It causes an income loss. A personal policy only addresses the vehicle. A commercial policy can address both. Now, you might be thinking this sounds too good to be true, or that it must be outrageously expensive. The cost varies, of course, but for many small businesses, it's a remarkably affordable addition to a commercial policy. And when you compare the modest monthly cost to the catastrophic expense of shutting down your business for a month, it's not even a question. It is one of the highest value coverages you can buy. But here's the critical part, the detail you absolutely cannot miss. This is not standard. You don't automatically get this with every commercial policy. It's an endorsement, an add-on, a specific piece of coverage you often have to ask for. Many business owners, even those who have a commercial policy, don't have it because they either didn't know it existed, or their agent never explained its life-saving importance. They have a policy that will replace their truck, but they don't have a policy that will replace their income. They've only solved half of the equation. So we've established that a commercial policy can protect your gear, and it can even protect your income. It acts like a financial shield for your business operations. But the protection goes even deeper, and into a territory that is far more terrifying for a business owner. Because what happens if the accident is your fault? What happens when the other driver isn't just injured, but decides to sue you for everything you have? This is where the difference between a personal and commercial policy stops being about business and starts getting deeply, deeply personal. It's where the line between your work truck and your family home gets terrifyingly blurry. Let's talk about that blurry line. Let's make it real. Imagine a guy named Frank. Frank's a plumber. He's good at what he does, built his business from the ground up. He has a family, a mortgage, and a Ford F-150 that is his pride and joy. It's his daily driver, but it's also his workhorse. It's got his company logo neatly on the side, a professional rack for his pipes, and a toolbox in the back that's worth more than most people's first car. Frank is smart with his money, so when he got his truck insured, he got a personal auto policy. It was cheaper, easier, and he figured, hey, I'm the only one driving it, what's the difference? He was saving maybe, $70-80 a month? Seemed like a no-brainer. One Tuesday afternoon, Frank is driving home from a big job. He's a little tired. He's thinking about dinner. He's stopped at a red light behind a brand new Lexus. The light turns green. Frank takes his foot off the brake, but his work boot, caked with a bit of mud from the job site, slips off the pedal and jams the accelerator for just a fraction of a second. His F-150, heavy with tools and materials, lurches forward and slams into the back of the Lexus. It's not a catastrophic high-speed crash, but it's a solid hit. The Lexus's trunk is crumpled. Frank's bumper is dented. Frank does everything right. He gets out, makes sure the other driver, a woman who's a surgeon, is okay. She's shaken, holding her neck, but says she's fine. They exchange information. Frank calls his insurance company, the one that provides his personal auto policy, and opens a claim. He thinks, this is a massive pain, but this is exactly why I pay my insurance premium every month. He's not worried. He's covered. A week later, the call comes. It's from a senior claims adjuster named Susan. Susan's voice is calm, professional, but firm. She asks Frank to confirm the details of the accident. So, Mr. Miller, you were on your way home from a job site? Yes, Frank says. And the tools and materials in the back of your truck, those were for your plumbing business? That's right, Frank says, starting to feel a little uneasy. Then Susan says the words that change Frank's life forever. Mr. Miller, I'm sorry to inform you, but we are denying your claim. Your policy contains a business use exclusion. You were using your vehicle for commercial purposes at the time of the loss, which is a violation of the policy terms. We will not be covering the damages to your vehicle, nor will we be providing liability coverage for the damages to the other party. Frank is stunned. He can't breathe. What are you talking about? It's my truck. I pay you every month. Susan calmly explains that the policy he paid for was for a personal vehicle, priced based on the risk of someone driving to the grocery store, to their kid's soccer game. It was not priced for the risk of a commercial vehicle, loaded with heavy equipment on the road all day, every day as part of a business. He didn't just have the wrong coverage. In the eyes of the insurer, he had no coverage at that moment. But it gets so much worse. The next week, Frank gets a letter from an attorney. The surgeon in the Lexus, it turns out, wasn't fine. The jolt from the heavy F-150 caused a severe spinal injury that requires surgery and may affect her ability to perform her job ever again. She is suing him, personally, for $2 million. Suddenly, that $80 a month he saved feels like the stupidest financial decision he has ever made. His personal auto policy has washed its hands of him. They won't provide a lawyer. They won't pay a settlement. They won't pay a dime. Frank is completely, utterly on his own. The lawsuit begins and Frank has to hire his own lawyer, draining his business's cash reserves. The legal process drags on. The surgeon's lawyers start looking into Frank's assets. Not his business assets, his personal assets. They see the house he and his wife bought 15 years ago. They see his retirement savings, the 401k he's been dutifully contributing to for 2 decades. They see his kids' college funds. To them, this isn't a separate business account. It's all just one big pot of money to pay for their clients' medical bills, lost income, and pain and suffering. This is the catastrophic reality of the liability gap. It's the terrifying space between what you think your insurance covers and what it actually covers. And when you fall into that gap, you don't just lose a court case. You lose everything. The line between Frank the plumber and Frank the dad, the husband, the homeowner, it just got erased. His business mistake is now threatening to take his family's home. The F-150 that was supposed to be the engine of his prosperity has become the weapon of his financial destruction. Now, why are the insurance companies so strict about this? It's not just them being greedy. It comes down to a fundamental concept: risk. When an underwriter calculates the premium for a personal auto policy, they're looking at a predictable set of data. They know how many miles the average person drives to and from an office job. They know the typical weight of the vehicle. They know the driver is usually not exhausted from a day of hard physical labor. The risk is known and it's relatively low. A commercial vehicle is a completely different animal. Think about it. Frank's truck is on the road 8 to 10 hours a day, compared to maybe 1 or 2 for a commuter. It's constantly driving in and out of busy, unfamiliar job sites. The weight of the truck changes dramatically depending on the materials he's carrying, which affects braking distance and handling. The tools inside could become dangerous projectiles in a crash. And frankly, the logo on the side of the truck? In a lawsuit, that makes it a much more attractive target. It screams business with assets, making a lawsuit more likely. The risk is higher. The potential for a serious, expensive accident is exponentially greater. So the premium has to reflect that. When Frank told his insurance company it was a personal vehicle, he wasn't just saving a few bucks. He was misrepresenting the risk. And in the world of insurance, misrepresentation is grounds for denial. The insurance company's argument is simple. You can't pay for a bicycle policy and expect us to cover your Ferrari when you crash it. You paid for a personal level risk pool, but you were operating in a commercial level risk pool. Frank's story isn't an exaggeration. It happens every single day across America to contractors, real estate agents, delivery drivers, freelancers, anyone who blurs that line. They make a simple, honest mistake thinking they're being frugal, and they end up paying a price that can't be measured in money. They pay with their homes, their futures, their peace of mind. So, the commercial policy isn't just a more expensive version of your personal policy. It's a completely different product, designed for a completely different world of risk. It's not an expense. It's a firewall. It is the legal and financial wall that stands between a mistake you make on the job and your family's security. It's designed to protect your business assets, yes, but more importantly, it's designed to ensure that if the worst happens, the consequences stop there. It ensures that a lawsuit against your company doesn't become a lien against your house. This firewall is built with specific coverages that simply do not exist in a personal policy. Coverages that understand the unique chaos of running a business. So how does this shield actually work? What are the specific life-saving clauses hidden inside a commercial policy that your personal agent probably never told you about? We're about to pull back the curtain on the critical coverages that separate financial security from total ruin. Let's start with the most glaring, most fundamental difference: the liability limits. On your personal auto policy, you probably see a set of 3 numbers, something like 100/300/100. This means your policy will pay a maximum of $100,000 for bodily injury to any one person, a maximum of $300,000 for all bodily injuries in a single accident, and $100,000 for property damage. It seems like a lot of money, right? It was back in 1995. But in today's world, a single serious accident can blow past those limits before the first responders have even cleared the scene. Now look at a standard commercial auto policy. You won't see 3 numbers. You'll see $1 million. And it's not just a bigger number. It's a smarter number. This is called a combined single limit, or CSL. It's a single flexible pool of $1 million that can be used for any combination of bodily injury and property damage in an accident. There's no cap per person. There's no artificial wall between injury claims and vehicle damage. It's just one massive war chest dedicated to protecting your business. Let's make this real. Imagine you're a contractor. You're driving your F-250, pulling a trailer with a mini excavator, on your way to a job site. You glance down at your phone for a split second, and in that moment, you cause a 3-car pileup on the interstate. In the first car, a surgeon suffers a career-ending hand injury. His medical bills and lost future income are valued at $700,000. The other 2 cars have multiple passengers with less severe injuries, totaling another $100,000. And the property damage, 3 totaled vehicles including a brand new Tesla, comes to $200,000. The total damages are exactly $1 million. If you only have that personal 100/300/100 policy, let's see what happens. For the surgeon, your policy pays its maximum of $100,000. That leaves him short $600,000. For the other passengers, the policy pays their $100,000. For the property damage, it pays its max of $100,000, leaving another $100,000 unpaid. In total, your personal policy paid out $300,000, and you are now personally on the hook for the remaining $700,000. The surgeon's lawyers will sue your business. Then they'll sue you personally. They will come after your business assets, your home, your savings, your kids' college funds. Everything you've ever worked for is now on the line because your insurance was built for picking up groceries, not for running a business. Now let's rewind. Same horrific accident, but this time you have a commercial policy with a $1 million combined single limit. The policy doesn't care how the damages are split. It sees $1 million in claims, and it has $1 million to pay them. The surgeon is made whole. The other passengers are covered. The cars are replaced. Your insurance company writes the checks, and your business is shielded. You get a terrifying lesson in distracted driving, but you don't lose your livelihood. That is the monumental difference between a personal policy's split limits and a commercial policy's combined single limit. One is a bucket, the other is a reservoir. But what if the accident isn't even in your truck? What if you weren't even driving? This brings us to the second and perhaps most overlooked coverage that exists on a commercial policy: hired and non-owned auto liability. This is a ticking time bomb for millions of small businesses, and most owners have no idea. Let's break it down. Hired auto covers you when you rent, lease, or borrow a vehicle for business use. Think renting a cargo van to deliver a large order. Simple enough. But non-owned auto is the real silent killer. This provides liability protection for your business when an employee uses their own personal vehicle for company business. Let that sink in. Your employee in their own car on a work-related errand. You run a small bakery and you send your cashier Tim on a quick run to the warehouse store for more flour in his 2008 Toyota Camry. On the way, he runs a stop sign and plows into a minivan, causing serious injuries to the family inside. Tim has his own personal auto insurance, but it's the state minimum, $15,000 of liability coverage. It's exhausted instantly. The family's medical bills are hundreds of thousands of dollars. Their lawyer isn't going to stop with Tim, a cashier who has no assets. They are going to look for the deep pockets. And who sent Tim on that errand? You did. Your bakery. In the eyes of the law, Tim was acting as an agent of your business, which makes your business vicariously liable for his actions. The lawsuit isn't filed against Tim. It's filed against your bakery. You call your personal auto insurance agent, the one who covers your personal car. They'll tell you, sorry, your policy doesn't cover employees driving their own vehicles for your business. You are totally exposed. A $10 errand for flour has just triggered a $500,000 lawsuit, that could shutter your business forever. A commercial auto policy with hired and non-owned coverage solves this. It steps in and provides that $1 million liability shield over your business for the actions of your employees. It turns every employee's personal car into a protected vehicle, but only when it's being used for your business. Every time you ask someone to go to the post office, drop something at a client's office, or pick up lunch for the team, you are playing Russian roulette with your company's future if you don't have this coverage. It's not an add-on, it's an absolute necessity. Finally, let's talk about the ultimate form of protection, the holy grail of commercial auto coverage. It's known simply by a number, symbol 1. On a commercial policy, different numbers or symbols designate what types of vehicles are covered. Most policies cover owned autos only, or specifically described autos. But symbol 1 is different. It stands for any auto. Any auto. This means the policy's liability coverage extends to any vehicle used for your business, period. The trucks listed on your policy? Covered. A van you rent for a week? Covered. Your employee using their own car? Covered. But here's where it becomes truly powerful. Let's say your business is booming and you win a big contract. You need a new truck and you need it now. You find a great deal on a used F-350 at an auction on a Saturday. You buy it, and your new employee drives it straight to the job site first thing Monday morning. You're so busy you completely forget to call your insurance agent to add the new truck to the policy. On the way to that job, your employee causes an accident. With almost any other type of policy, including a personal one, you would have zero coverage. The vehicle was not listed on the policy. The claim is denied. Your brand new asset is wrecked. Your business is being sued for liability, and you're facing financial ruin. All because of a simple oversight. But with symbol 1, any auto, it doesn't matter that you forgot to call. The policy automatically and instantly extends liability coverage to that new truck from the moment you took ownership. The claim is covered. The lawsuit is handled. Your business is safe. It's a bulletproof safety net that accounts for the chaos and reality of running a business, where things move fast and paperwork sometimes falls behind. It protects you not just from accidents on the road, but from your own human error. So we have higher, more flexible limits that won't leave you bankrupt. We have protection for the hidden risks of employees running errands. And we have the all-encompassing shield of any auto coverage. These aren't just minor clauses in the fine print. These are foundational pillars of protection that a personal auto policy simply cannot, and was never designed to, provide. We've covered the massive liability bombs that can vaporize your business. But what about the vehicle itself? What happens when your custom-built work truck, with $20,000 of permanently installed toolboxes, racks, and equipment, gets totaled? Your personal policy might give you pennies on the dollar for that equipment. In the next part, we'll expose the critical differences in how policies cover your physical assets, your tools, your equipment, and your custom modifications, and how the wrong policy can leave you unable to even get back to work. Let's talk about a guy named Frank. Frank's a carpenter. A damn good one. He's got a 10-year-old F-250 that's more than just a truck. It's his mobile workshop. In the back, under a locked tonneau cover, he has everything. His miter saw, his table saw, nail guns, drills, hand tools. We're talking $15,000, maybe $20,000 of equipment that he's built up over a decade. It's his livelihood. One Tuesday morning, Frank wakes up, grabs his coffee, and walks outside. The truck is gone. Just an empty space in his driveway. Your heart sinks just thinking about it, right? He does what you're supposed to do. He calls the police, then he calls his insurance company. He's got a standard auto owner's policy, the same kind you have on your family sedan. He's been paying his premiums on time for years. He thinks, okay, this is horrible, but at least I'm covered. And that's where Frank's nightmare truly begins. The insurance adjuster is polite, sympathetic even. They process the claim for the stolen truck. They look up the Blue Book value, factor in the mileage and condition, and a few weeks later, a check arrives for the F-250. It's less than he hoped, but it's something. But then Frank asks the most important question. What about my tools? What about the $20,000 of equipment that was in the truck? And the adjuster delivers the soul-crushing news. He points to a tiny clause in Frank's personal auto policy. It might offer a couple $100 for personal effects. Maybe $500 if he's lucky. But then comes the knockout punch. There's an exclusion. It states clear as day that the policy does not cover property, tools, or equipment used in connection with a business, trade, or profession. 0. Not a single dime for the tools. The very things that allow Frank to earn a living are completely unprotected. The insurance company didn't just replace his truck. They effectively fired him from his own job. He has a check for a used truck but no tools to put in it. He can't take on jobs. He can't generate income. His business is dead in the water, all because he had the wrong piece of paper. This isn't a scare tactic. This is the fundamental, brutal difference between a personal and a commercial policy when it comes to your physical assets. A personal auto policy is designed to protect a person's mode of transportation and their personal belongings. A gym bag, some groceries, a stroller in the back. It was never ever designed to protect a mobile business. A commercial auto policy, on the other hand, understands that your vehicle is a tool, and it's filled with other tools. It addresses this head-on with something called inland marine coverage. Now I know what you're thinking. I'm a plumber, not a sailor. It's a confusing name, but just think of it this way. Inland marine is insurance for property that moves. It's a policy that protects your equipment wherever it goes. It's a force field around your tools. This coverage can be tailored to your exact needs. You can get a contractor's equipment floater that provides a blanket amount of coverage, say $20,000, for all of your tools and equipment. If they're stolen from your truck, you're covered. If they're damaged at a job site, you're covered. If they're destroyed in a fire at your storage unit, you're covered. Follows the property, not just the vehicle. For larger, more expensive items like a high-end generator, a commercial-grade power washer, or a specialized diagnostic machine, you can schedule them. That means you list that specific item on the policy with its serial number and its replacement value. It costs a little more, but it guarantees that if that specific high-ticket item is gone, you get a check for its full value, no questions asked. Can you feel the difference? It's the difference between hoping for the best and having a concrete plan. It's the difference between a business-ending catastrophe and a manageable setback. With a personal policy, Frank is out of business. With a commercial policy and an inland marine floater, Frank is shopping for new tools the next day, ready to get back to work. But it gets even deeper. Let's move beyond the tools inside the truck and talk about the truck itself. Think about a modern work vehicle. It's rarely a stock model off the lot. An electrician's van has thousands of dollars in custom shelving, conduit carriers, and interior lighting. A landscaping truck has a custom-built dump body or a hydraulic lift gate. A plumber's van is a rolling billboard with a full vinyl wrap that costs $5,000. These are not accessories. They are permanent, essential parts of the business. They are what make the vehicle a money-making machine. On a personal auto policy, none of that exists. When you file a claim for that totaled electrician's van, the insurance company sees a 2021 Ford Transit. They do not see the $10,000 of custom shelving and ladder racks that were permanently welded and bolted to the frame. They will pay you the actual cash value of a stock 2021 Ford Transit, and you will be left to eat the $10,000 loss on all your custom upfitting. You're not made whole. You can't just go out and buy a replacement. You have to buy a stock van and then spend thousands more out of pocket to build it back into the functional work vehicle you once had. A commercial auto policy solves this with a specific coverage called permanently attached equipment. When you set up the policy, you tell your agent, yes, I have a Ford Transit, but I've also invested $10,000 in permanent shelving and a custom roof rack. That value gets added to the policy. Your premium might go up by a few dollars a month, but now the insurance company is insuring the entire vehicle as you use it. The whole asset. If it's totaled, your check will cover the value of the stock van, plus the value of your custom modifications. You are actually put back in the position you were in moments before the accident. That is the entire point of insurance, and it's a promise a personal policy simply cannot make to a business owner. Now, I know what some of you are thinking. It's that little voice in the back of your head that says, what if I just don't tell them? What if my tools get stolen and I just tell the insurance company they were for a personal project? That I was just helping out a buddy. Let me be crystal clear. This is a terrible, terrible idea. It's called insurance fraud, and it can ruin your life far more completely than a stolen truck. Insurance carriers have entire departments, special investigation units, or SIUs, staffed by former law enforcement and expert investigators. When you file a claim for $20,000 worth of stolen professional-grade tools, they're not just going to take your word for it. They will look you up. They'll see your LLC. They'll find your company's Facebook page with pictures of your work. They'll see your Yelp reviews. They'll check your tax records. The moment they discover you operate a carpentry business, your claim isn't just denied. It's flagged for fraud. A denied claim means you get no money. A fraud investigation could mean fines, legal trouble, and being blacklisted by insurance carriers for life, making it nearly impossible to get coverage for your home, your cars, or your business ever again. The risk is catastrophic. The few $100s a year you might save by trying to skate by on a personal policy is not a savvy business move. It's a reckless gamble with your entire future. So let's put it all on the table. Your physical assets, the lifeblood of your business, are sitting ducks under a personal auto owner's policy. It sees your tools as non-existent. It sees your expensive, custom modifications as worthless. It values your vehicle not as the specialized business asset it is, but as a generic passenger car. It's a policy built on a foundation of exclusions that are specifically designed to shut down coverage the second a business activity is detected. A commercial policy is the opposite. It's built on a foundation of endorsements. It's designed to be customized. It allows you to add coverage for your tools, to schedule your most valuable equipment, and to ensure the full, real-world value of your permanently modified vehicles. It protects your ability to get up the next day and keep working. We've covered your stuff. But what about your people? What happens when you send your best employee, Mark, to Home Depot in the company truck, and he causes a 10-car pileup? We'll uncover the terrifying liability gaps in a personal policy when employees are behind the wheel, and introduce a concept called non-owned and hired auto that could be the only thing standing between your business and total financial ruin. Imagine your top employee, Sarah. She's reliable, she's dedicated, and she's been with you for years. One Tuesday afternoon, you ask her to do something simple. Run to the office supply store to pick up a box of paper and some ink cartridges. It's a 5-minute drive. She hops in her own car, a sensible Toyota Camry, and heads out. She's done this 100 times, but this time is different. On her way back, she glances down at her phone for just a second to check the directions. In that split second, traffic ahead of her slams on the brakes. She looks up too late. The resulting crash is severe, involving multiple vehicles and causing serious injuries to another driver. Now the legal and financial nightmare begins. The injured party, facing a long recovery and massive medical bills, hires a lawyer. That lawyer doesn't just see Sarah in her Toyota Camry. They see a driver who was on the clock, performing a task for her employer. They see your business. And your business has much deeper pockets than Sarah does. This is a legal doctrine called vicarious liability, or sometimes respondeat superior, which is just a fancy way of saying that an employer is responsible for the actions of its employees while they are performing their job duties. So the lawsuit isn't just filed against Sarah, it's filed against your business. Your first thought might be, okay, this is terrible, but that's what insurance is for. Sarah has car insurance. And you're right, she does. Her personal auto policy is the first line of defense. But her policy has a liability limit of $50,000. The injuries and damages from this crash are estimated at over $500,000. So, her insurance pays out its maximum, and now the lawyers for the injured party turn their full attention to your business for the remaining $450,000. You pick up the phone and call your personal auto insurance agent, the one who covers your family's cars. You explain the situation. You say, Sarah was driving for my business, I need to file a claim. And that's when you hear the 5 words that will haunt you for the rest of your life. We are denying your claim. Why? Because you're trying to use a personal auto policy to cover a commercial liability. The insurance company will point to the exclusions in your policy, the ones that specifically remove coverage for business-related activities, especially when an employee is involved. They will argue that the policy was designed to cover you driving to the grocery store, not your employee running business errands. Suddenly, you are facing a $500,000 lawsuit, with crippling legal fees, and absolutely zero insurance coverage. Your business, your life's work, your family's financial future. It's all on the line because of a box of paper. This terrifying scenario is not an exaggeration. It happens every single day to business owners across America who don't understand this critical gap. But there is a shield. There is a specific type of coverage designed for this exact situation, and it is called hired and non-owned auto coverage, or HNOA. This isn't a standalone policy. It's a relatively inexpensive endorsement that you add to your commercial general liability or business owner's policy. And it is arguably one of the most important coverages a modern business can have. Let's break it down. The non-owned part is what would have saved our business owner in the story about Sarah. Non-owned auto coverage protects your business when an employee gets into an accident, while using their own personal vehicle for business purposes. It kicks in when the employee's personal insurance isn't enough, or in a worst-case scenario, if their insurance company denies the claim because they were using the car for work. Covers the gap. It pays for the lawyers to defend your business and pays for the settlement or judgment, up to the policy limits. Think about how often this happens. An employee running to the post office, a salesperson driving their own car to meet a client, a manager grabbing lunch for a team meeting. Every single one of these seemingly innocent trips is a massive uninsured liability risk for your business, unless you have non-owned auto coverage. Now let's talk about the other half. Hired auto. This is just as crucial. Hired auto coverage protects your business when you or an employee are driving a vehicle that you have hired, leased, rented, or borrowed for business use. The most common example is renting a car on a business trip. You might think the insurance offered at the rental counter is enough, or that your credit card provides coverage. And while those can help, they often have significant limitations and may not protect your business entity from a lawsuit. If you rent a car for a business trip, get in an accident, and your business gets sued, hired auto coverage is what steps in to defend the company. But it goes beyond rental cars. Did you ever rent a U-Haul truck to move some office equipment? That's a hired auto. Did you ever borrow your friend's pickup truck for an afternoon to haul materials to a job site? That's a hired auto. Without this specific coverage, you are once again operating without a net, exposing your business to catastrophic risk for the sake of convenience. What's truly shocking is how affordable this protection is. For many small businesses, adding a hired and non-owned auto endorsement to their general liability policy might only cost a few $100s a year. A few $100s to close a loophole that could easily lead to $1 million judgment. It is, without question, one of the highest value investments you can make in the security of your business. It transforms your insurance from a simple policy into a comprehensive shield that understands the realities of how businesses actually operate, with employees, with errands, with rented vehicles. This is the fundamental chasm between a personal auto policy and a true commercial insurance strategy. Your personal policy is built around a simple idea: protecting you and your car. A commercial strategy, including HNOA, is built around a much more complex reality: protecting your business entity from a vast web of potential liabilities, many of which don't even involve a car you personally own. It protects your balance sheet, your payroll, your legacy. It understands that in business, the biggest risks often come from the places you least expect, like a simple trip to the office supply store. So we've covered the vehicle you own. We've covered the vehicle your employee owns. We've even covered the vehicle you rent or borrow. We've sealed the most common and dangerous gaps that exist between personal and commercial policies. But we're not done. To truly make your coverage bulletproof, we need to go one level deeper. We need to talk about the special endorsements and coverages that take a good policy and make it great. What happens if you, the business owner, need to drive a car you don't own for personal reasons? What about the thousands of dollars of equipment permanently installed in your work truck? Is that covered? In our final part, we will explore the advanced strategies, the little-known endorsements like drive other car coverage, and the critical questions you must ask your agent to ensure that when a disaster strikes, you are truly 100% covered with no surprises. And the first question, the one that cuts through all the noise, is this: can you show me in writing where my business use is explicitly covered on this personal auto policy? Don't accept a verbal, "Oh yeah, you're fine." Ask for the specific endorsement number, the exact paragraph in the policy booklet. It's the difference between a casual assurance and a legally binding promise. If your agent hesitates or can't point directly to the language, that's not just a red flag. It's a giant flashing neon sign telling you there's a problem. The second question you must ask is, what specific exclusions apply to my type of business use? This is where the truth comes out. Are there limitations on mileage? On the weight of materials you can carry? Is there a clause that voids coverage if you transport goods for a fee, even once? This is the fine print that can sink a business. They might say you're covered for business use, but buried on page 47 is an exclusion for commercial delivery or artisan use, the very thing you do every single day. Third, and this is critical for anyone with even one employee or helper: if I hire someone and they drive my vehicle for a business errand, are they covered? And what if they drive their own car to run that same errand for my business? This question opens the door to one of the biggest and most misunderstood gaps in insurance: hired and non-owned auto liability. Let's say you send your assistant, Sarah, to the post office in her own Honda Civic. On the way, she runs a red light and causes a catastrophic accident. The victims aren't just going to sue Sarah. Their lawyers will come after the deepest pockets they can find, your business. They will argue correctly that she was acting on your behalf. Your personal auto policy will not touch that claim. Sarah's personal policy might have low limits, or her insurance could even deny the claim because she was using her car for commercial purposes. Suddenly, your business, your house, your life savings are on the line because of a $10 errand. A hired and non-owned auto policy, often just a few $100s a year on a commercial plan, would have completely shielded you. And that brings us to the advanced strategies, the little-known endorsements that separate the amateurs from the professionals. Let's talk about something called Drive Other Car Coverage, or DOC. This is a fascinating and powerful tool. Imagine you're a business owner. Your primary vehicle is a company truck, listed on your commercial auto policy. To save money, you don't own a personal car. On the weekend, you borrow your friend's car to go to the grocery store. You get in an accident. Who pays? Your commercial policy won't, because you weren't using the company truck for business. Your friend's insurance might be primary, but what if their limits are low? What if you're seriously at fault? You are personally exposed. Drive Other Car Coverage is an endorsement you add to your commercial policy that extends coverage to you, the business owner, when you're driving a vehicle you don't own for personal use. It essentially gives you personal auto insurance through your commercial policy, plugging a potentially devastating gap that many business owners don't even know they have. Now let's go deeper on the contents of your vehicle. Question 4 for your agent. My tools, my equipment, my products. What happens if they are stolen from my truck or damaged in an accident? Your personal auto policy will almost certainly say, "Sorry, not our problem." Covers the car, not the stuff you use to make a living. A commercial auto policy can be endorsed with what's called inland marine coverage. It sounds strange, but think of it as property in transit. It's a specific type of insurance that protects your valuable equipment and inventory wherever it goes. In your truck, at a job site, or anywhere in between. For a contractor, a photographer, a plumber, or a caterer, this isn't a luxury. It's an absolute necessity. The most expensive insurance is the one that doesn't pay out when you need it most, and relying on a personal policy to protect thousands of dollars in professional gear is a gamble you will eventually lose. To see how all these pieces come together, or fall apart, let's consider the story of Mark, a freelance IT consultant. Mark was smart. He knew he used his SUV to visit clients, so he told his agent. The agent added a business use endorsement to his personal auto policy and said he was good to go. Mark felt protected. One afternoon, he was driving to a new client's office with a server worth $5,000 in the back. He was running a little late. He swerved to avoid a car that cut him off, lost control, and hit a guardrail. The accident wasn't his fault, but the damage was severe. His SUV was totaled, and the server was destroyed. Here's where the nightmare began. He filed the claim. The insurance company paid for the damage to his SUV, no problem. But when he submitted the claim for the $5,000 server, he was met with silence. Then a letter arrived. It quoted a section of his personal auto policy, the property exclusion, stating it does not cover property being transported for a fee or used in the course of business. His $5,000 loss was completely denied. But it got worse. The adjuster, doing their due diligence, started asking more questions. How many miles a week do you drive for business? How many clients do you visit? Is transporting equipment a regular part of your job? Mark answered honestly. A week later, he received a second letter. This one was a non-renewal notice. The insurance company had determined that the nature and frequency of his business use exceeded the limited scope of their personal lines endorsement. They had paid for his totaled car, but they were now kicking him off his policy, labeling him a higher risk. Mark was left with a $5,000 hole in his pocket and was now scrambling to find new insurance, potentially at a much higher rate, all because of a gray area he thought he had covered. A simple commercial policy would have not only covered the server under an inland marine endorsement, but it would have been the correct policy for his operations from the start, with no questions asked. There would have been no investigation into his business practices, no risk of being dropped after a claim. There would have been only certainty. This is the ultimate difference between a personal and a commercial policy. It isn't just about higher liability limits or specific coverages. It's about intent and certainty. A personal auto policy is designed to say no to business risks. It's built on a foundation of exclusions, and any business use it allows is a reluctant exception. A commercial auto policy is designed to say yes to business risks. It's built on the understanding that you are using this vehicle to earn a living, and it provides a fortress of coverage specifically tailored to that purpose. So, as we end this journey, the final takeaway is this. Stop thinking of insurance as a commodity like buying gas or groceries. It is a complex legal contract that will be the most important financial document you own if the worst day of your life ever happens. Your responsibility is not just to pay the premium, but to understand the promise. This week, I challenge you to do one thing. Pull out your auto insurance declaration page. Look at the words on it. If you use your vehicle for anything other than commuting to a single office, pick up the phone. Call your agent. And don't start the conversation by asking, "Am I covered?" That's a yes or no question that invites a simple, unhelpful answer. Instead, start by saying, "I need you to explain to me, as if I were a 5-year-old, exactly how my policy responds if I get into an accident while doing X." And fill in the blank with whatever your business activity is. Ask them to show you the language in the contract. This isn't about fear. It's about foresight. It's about trading a small amount of discomfort now, the awkwardness of a detailed phone call, for peace of mind and financial certainty later. The line between a personal auto policy and a commercial one isn't just a line in the sand. It's a chasm. And it's your job to know, without a shadow of a doubt, which side of it you're standing on before an earthquake hits. Because when the ground starts shaking, it's too late to check the map. Make the call. Ask the hard questions. Secure your future. You've worked too hard to let it all ride on a misunderstanding.